What's up, Banter fam? Welcome back to the show. It has been a crazy last 24 hours in crypto. We have had the most volatility we have had in weeks. I said on my show a couple of days ago that I was expecting a big move at some point in the very near future. And what did we end up getting? We ended up getting a massive move yesterday pre-CPI. The markets were tanking. Then when the CPI data was announced, there was obviously pretty unfavorable data coming in slightly hot on the core CPI. That resulted in the market dropping again. But then, funnily enough, the stock market actually clawed back some of its losses, and so did the crypto market. So I want to run through what actually went down last night. What was the reason for this volatility? How I see that playing out going forward. And I also want to give you a DeFi market update where I think a lot of the top opportunities over the next few months will lie. So let's get straight into the show. The first thing is to note is the CPI data coming in at 8.2%. Last month in September, it came in at 8.3%. So on first glance, you'd be thinking, wow, that's good. Inflation's actually coming down. The Fed's job is working. But unfortunately, the core CPI, which removes fuel and food costs from the data, we know electricity costs are easily manipulated, so they remove them to work out the core CPI. We can see that inflation actually came in a bit hotter at 6.6%. This means that despite the Fed's best efforts, despite the beginning of rate hikes and quantitative tightening, that essentially what they're doing isn't working. And this did send shockwaves down the spines of traditional finance and both crypto investors as we saw the markets plummet last night. But a lot of the damage was already priced in pre-announcement, which is the reason why we did see a massive rally post the CPI data, post that initial little bit of panic. Yesterday, if you guys were watching the charts, you would have been like, shit, this is the end. This is going to zero. I mean, my Twitter feed was full of bearishness. And then I woke up this morning and I was like, wow, we're back at 19.5. That's crazy. Like it was a real strong reversal, mainly from Bitcoin, but also the altcoins, which we hit very, very hard, did reverse as well. We could see that the target rate probabilities have actually shifted a little bit since last night as well. What this is it shows us the probability of the Fed hiking either 50, 75, or 100 basis points in the next hike cycle. Essentially, what they do is they take the CPI data into account, and that CPI data acts as a basis for how aggressively they hike rates in November. So we have the next Fed meeting in 2 weeks in November, and this will dictate how aggressively they hike rates. Right now, the probability is lying with the 75 BPS hike. There is a small chance we get a 50 BPS hike at 4%. Prior to the CPI, this was roughly 50-50. So it's now skewed heavily in favor of a 75 basis point hike. And as of this stage, this is what the market think will happen. Last night, funnily enough, the 100 BPS hike was actually a 2% likelihood. So we started to see that come into the picture a little bit, but it's not in there right now as I've woken up this morning. None of the banks, by the way, actually predicted this CPI correctly. So the CPI prediction or the expectation from most banks was 8.1%. And that is roughly what the market was pricing in. It did come in at 8.2%, which was 0.1% higher. It's crazy that not even the top institutions or banks saw this coming, and they all predicted 8.1%, and we came in hotter than that. And if you do have a look at some of the price increases that aren't just the core CPI itself, and you look at the fuel, the gas, the electricity, the transportation. I mean, just imagine being a normal consumer right now. I genuinely feel for the majority of not only the American population but Europe and other countries that are being affected, because this is insane. Like the average price of cooking at home is now up 13%. So if you're just a normal standard American family, like just feeding your family is now so much harder. And we know wage growth is not going up in parallel with CPI growth. So we might see food go up 13%, but we're only seeing wage growth grow up like 2 or 3%. So it becomes very, very challenging for a lot of families. And I think on a wider scale, the short-term future, at least maybe over the next year or so, it does look quite grim. And it does seem like sometimes there's no light at the end of the tunnel. But I do think there is, especially for crypto itself. And I'll get into the reasons why I think there is light at the end of the tunnel in a second. But we're just going to have to brave through these economic times. I do think things are going to get a little bit worse. But we are already seeing, things start to get pretty bad, or at least the market pricing in that being the case. But funnily enough, although the market is pricing in that being the case, on a day where the US core inflation prints at levels not seen in 40 years, by the way, this is the highest inflation in 40 years, Bitcoin is actually green and US equities are actually green. So despite that initial panic, we saw a reversal from Bitcoin I'm going to refresh to get the most accurate data here. Bitcoin reversed to 1.3% in the green. Many altcoins did the same. I know some are down on the days, but if you guys looked 12 hours ago, Polygon was down 8%. Tron was down like 10%. Polkadot down 8%. Solana down 10%. Cardano down 9%. They have all reversed quite strongly. And that's off the back of the highest inflation day in 40 years. So it just shows once again, the market does like to price this stuff in before it happens. And usually the worst events in the market, or at least the worst drops, are before a major announcement. They often don't come on the announcement itself. People like to de-risk ahead of announcements, and that's exactly what we've seen. So now that you guys are up to speed on what happened there, I want to get into what I'm kind of foreseeing in the future in terms of the market, and specifically the DeFi market, because you guys know I am passionate about the DeFi sector. I think the DeFi sector will be one of the areas of crypto that exhibit some of the strongest performances and will give some of the strongest opportunities over the next 6 to 12 months and beyond, of course, as DeFi really cements itself as a genuine, not competitor, but product that can operate alongside traditional financial products. And I do think this space is where we are going to find a lot of these 50 to 100x gains. You guys know my job right now, or at least my job in my own head, is to find these projects that are going to perform over the next year, over the next 2 years. Maybe not so much the project everyone else is talking about, but the ones that we can identify as being strong performers. And that is what I dedicate most of my time doing these days, hours and hours a day researching this stuff. So I want to point you guys on the right path. And we will, of course, over the next few months, as we have been doing, discuss a lot of these altcoins, but also go more into depth about what can happen and what can occur in the DeFi ecosystem. And I think the best way to get started with that is to look at what the current state of DeFi is telling us, how things are looking, and what type of products are looking most promising. So let's get straight into that. But remember, next week, just before we get into all that stuff, we are launching, my video started to play, we are launching, of course, the trading comp. It starts on Monday. It starts in 3 days. You only have 3 days to sign up, and I will be very active in this trading comp. I think I learned my lesson from the last comp. I was a little bit too aggressive, and I was actually sitting top 50 for a large percentage of the competition. But then I just got too cocky. I started taking big trades, and then I went all in, and I basically wrecked myself by the end of it because the competition does something weird to your head. You kind of start to trade a little bit differently to what you would normally. So this time I'm taking a completely different approach. I'm implementing a strategy that I do on my normal account, which has been profitable in the past. And I'm going into this trading challenge with kind of a refreshed mindset. And no, I'm not a professional trader. No, I haven't traded for as long as Sheldon and Kyle. I'm more of a fundamentalist. But I still think with the knowledge I have in the market, I can definitely give this a red hot crack at finishing top 10. And I'll be sharing my trades with you guys along the way, or at least my mindset, because I think everyone's trading style is different. But I can point you in the direction that I'm taking in terms of what I like in terms of trades. So if you do want to sign up and get involved, I highly recommend doing so, because this is not only a trading comp where you can win 10,000 as the top place, but we're giving away $100,000 in prizes. This is the biggest comp we have done to date. $100,000. It's a massive prize pool. Only 682 people signed up. All you need to do is finish in the top 10 out of 700 people to win up to $100,000 in cumulative prizes. It's a no-brainer to enter, because all you need is $250 to get involved. In my opinion, of course, if you don't trade, you don't need to, but I think, it's basically free money if you can actually win a prize, although it will be quite competitive. This is the prize pool. You can see $25,000 here, $30,000, 18, 7, 3, etc., depending on where you finish. So yeah, that is that. You will need a Bybit account, registration link in the description to sign up and register. If you click that link, you'll automatically be able to register for an account and log in, and then also BitGet as well, because we're doing a $55,000 trading comp at the same time starting Monday on BitGet, and that's for $55,000. So $155,000 in prizes. Crazy money, crazy money. If you're not involved, look, it's going to be an absolutely awesome experience, and I'll keep you updated on my trades every day. Okay, I'm speaking very fast, but that's because we have a lot to go through. And the first thing I want to go through is just a bit of perspective. I think in these times, we all need a little bit of perspective. The DeFi market cap is $46 billion. All right, that is the total value of the DeFi market cap on October 3rd. It's slightly lower now. It's actually around 40 billion. Okay. TradFi, traditional finance, so the traditional financial ecosystem, so your banks, your borrowing and lendings, like essentially banks, right, but also like hedge funds, they are all valued at $100 trillion. So that's basically the value of the US stock market. This is mostly US data, because I'd say DeFi is mostly in the US, or even if you're based out of the US, you're kind of based in the US, and TradFi, that's kind of the most like-for-like comparison we can give. It's in America. So 100 trillion versus 46 billion means DeFi is very small. Guys, this is very, very small. We are so early in terms of like DeFi is a fraction of a percentage of the value of TradFi. So basically what this means is one big hedge fund could literally come along on any given day, swoop in and buy the whole of DeFi. That wouldn't put a dent in their balance sheet. So the reason why I think DeFi remains the most attractive risk-reward proposition is because its use case is prominent. Financial services drive the entire world economy. These financial services can and will be offered on blockchain, and that obviously is going to lead to multiple projects gaining many users. So this, in my opinion, puts it in great stead to have an attractive risk-reward profile, given the fact it's so undervalued relative to TradFi. And DeFi, it's kind of like a broad term, but the way to think about it is it's a financial ecosystem. So constituting DeFi is borrowing and lending. It's your automated market makers, your DEXs. Then you've got some games which incorporate economic elements you could also put into the DeFi category. And then it's all the bridges of infrastructure that can make this happen. So this isn't including the L1s, because you guys know L1s aren't on the application layer. Applications build on top of L1s. The L1s themselves aren't technically DeFi, but they are home to applications which are DeFi. And I do think, as we saw last cycle, DeFi was basically the strongest performing sector. There were a few sectors which gave it a run for their money, but overall, DeFi was what started exploding in 2020, and a lot of those projects were the ones that did the 5100Xs. And I understand it quite well, so this is why I personally like to niche down into this sector, because I do think that this is a sector that can exhibit strong gains, and I think it's so important in crypto to niche down into specific areas which you guys are interested in. So I'm passionate about DeFi. That's what I research. If you're passionate about gaming, research that. If you love L1s and you really believe that tokens will accrue value on the layer one layer, then research that. There's many different things you can research. You can be a DEX expert. You can be an NFT expert. Whatever it is, niche down, find your niche, because that you're going to be so much more effective being the master of one than the jack of all trades and the master of none. And that's what I've started to learn over the last year or so, or even like few years, since 2019, since I started investing in crypto. More than 3 years ago now. That's pretty crazy to me. I first bought crypto like 3.5 years ago. I mean, the time just absolutely flies. And in the last year especially, I really started to hone down. And I only saw the rewards once I started to do that. Whereas in the beginning, I was buying just everything under the sun. And it's okay to have a diversified portfolio as long as your time spend is focused on one thing. So I'm not talking about money here. I'm talking about time. You want to have a very direct time spend, because time equals money in the long run. But diversification is still also a good idea. So ALO says, if you have a long-term time horizon, then you should be buying in this quarter, especially if you think various assets make their way back to all-time highs and beyond in the coming years. Plenty of value out there. Don't overthink it. And I would agree to some extent. If you have a long-term time horizon, if your time horizon is 4 to 5 years plus, even 3 to 4 years plus, I don't think buying assets in this quarter or Q1 next year is a terrible idea. The shorter your time horizon gets, the more picky you need to be with when you're entering. The longer your time horizon gets, the less picky you need to be with your entering. So how you accumulate, how you DCA entirely depends on your time horizon. Now, there are certain assets that I view as long-term holds, all right? So, okay, let's say our Bitcoins and Ethereums, I'm happy to hold them for 4 to 5 years plus. In fact, I'd almost argue I'd be happy to hold Bitcoin for a decade, because I do believe it in a genuine hard money, sound alternative to money that will eventually operate as a strong store of value, and in my opinion, in the future, an inflation hedge. We haven't seen that yet, but that is my long-term thesis. So over a 10-year period, I'm comfortable holding Bitcoin. And if my time horizon is that long, and I believe that the only way out the Fed has is to print money, which I believe is the case, then buying Bitcoin today does not faze me, as long as my cash flow can handle buying Bitcoin today, right? And that's the same with Ethereum. I think Ethereum has the best chance of being that L1, even though it might not have the strongest gains. It is the safest because it has the most users, it has the most development, and it has the most backing. And when it has that, you know that long-term it has the runway to survive. So that is why Bitcoin and Ethereum, to me, as long-term holds, you can actually afford to accumulate. Now, as you go down the list, it gets harder and harder to apply that same logic, because a shitcoin worth $50 million, that can actually go down to 5 million now. Because if the worst isn't in, although Bitcoin and ETH, they might actually hold up okay, these smaller cap altcoins will bleed, and the ones that don't have runway will really suffer. So you need to be a little bit more picky with those coins, and I haven't started buying those coins yet. I am waiting for better entries on some of those smaller caps. Although I am, of course, nibbling on your Bitcoins, Ethereums, and some of the top L1s, because I have a much longer term time horizon with that. So remember, there is value in this market. You just got to zoom out a little bit. And there is a ton of value. I mean, if you buy Bitcoin at 10K or 20K or 15K and it's 100K in 5 years, do you really care that much? Like, if you do, okay, that's fine. But like, personally, I don't. If I buy 12 or 15 or 20 or 8 or 10, it's kind of the same thing to me because of my time horizon. Whereas, of course, if I buy Solana at 10 or 20 or 30, it's a bigger difference, right? Because I have a smaller time horizon. Or although I believe it could be great long term, the longer you hold a riskier asset, the higher the chance it has of failing eventually. So you just have to hone in your time horizon. Now, the way to actually work out whether a project is going to survive or not, because obviously that's the number one prerequisite. If we're looking at a small cap, we have to make sure it's going to survive. Otherwise, there's no point in investing in it. There's a few things to do. Now, we've seen a lot of hacks recently, and that's why the thumbnail of this video is rugged, because a lot of people actually did get rugged over the last few weeks. We've seen in the last 24 hours, this was a day ago when I planned the show, we've had all these exploits, these crazy exploits. I mean, SEC was investigating Yuga Labs, but we saw the Mango Markets hack. We saw the BNB hack, or the BNB exploit where they minted BNB. Luckily, they were able to stop and freeze those funds, but they were still hacked essentially, and they had to suspend it. There was 4 hacks in the one day 2 days ago. We saw the Rabby hack of 200,000. We saw the Paraswap hack. We saw the Stacks hack for 2.3 million. We saw the Mango Markets exploit for 112 million. That was a massive exploit, and that exploit was crazy because the hacker exploited it for 100 million, turned around, offered to return most funds if the DAO promised not to pursue criminal investigations, but the hacker had access to 30 million Mango votes, which meant they were able to manipulate the vote post-hack in their favor, which is absolutely crazy to me because they were essentially able to vote themselves as a yes, even though they were kind of bribing them or blackmailing them as to, oh, you have to promise to not pursue criminal investigations if you all agree to vote like that. So, and he voted for it himself. So this is almost highlighting an exploit in the DAO model. And we've seen this time and time again. We saw this, with the Lido Finance vote, where that whale came in and voted, and then it was voted against. DAOs aren't as decentralized as we'd like yet, and that's very clear from this. But I think what this emphasizes, and the point I was alluding to before, was we have to pay attention to what projects we are holding, what projects we accumulate in terms of A, long-term runway, and B, long-term safety. And there's a few things right now I want to show you that can actually help you understand what is going to be safe long-term. This applies to both an investing and a holding standpoint, and what is going to be around long-term, and that applies to runway. So cryptofees.info. You guys know this website. It's a great website because it shows you what is actually accruing, not accruing value, but what is accruing revenue, I guess is a better way to phrase it. And we can see that currently Ethereum does the most fees. Uniswap, as the main DEX on Ethereum and with the big fees it has, comes in at number 2. Aave, the biggest borrowing and lending platform, it does 253,000 usually per day on average. Bitcoin comes in slightly less. It's not really a massive payments network yet, so that's understandable at number 4. GMX comes in number 6, or number 5, sorry. So using crypto fees, you can start to get an idea at what protocols are actually making money. Because if we are to value a project long-term, it needs to be making money. How else do the holders accrue value from holding the tokens if they aren't making any money, right? Now, there are projects, and most projects, actually, 99% of the projects to this day, aren't generating fees. And why is that? Well, because their valuations aren't based on the value of the token itself. They're based on their long-term ability to accrue value and their future ability to earn revenue. Just like in the stock market, how Tesla was trading at a crazy valuation of like almost $500 billion when it was making $0 a year. In fact, it was posting losses and it was trading at $500 billion. That logic applies to crypto. And the reason this happens in both TradFi and crypto is because projects are speculations. People are speculating on future growth, and their valuations are using the DCF model or the discounted cash flow model to work out what their current value is based on the expectation of their future value. And if the expectation of a project's future value takes into account network effects and growth, then it will be worth more today, irrespective of fees. But by looking at fees, you do get another side of the picture, and you get the side of the picture that demonstrates what projects are actually earning fees right now. And this is important to make sure you don't invest in Ponzi's, which don't generate any fees. And Token Terminal is another great way to do this. We see that Ethereum's now number 1, OpenSea is number 2, Illuvium actually number 3, LooksRare number 4, PancakeSwap, DYDX. We see GMX in this list as well. I think Gains Network is just a little bit further down. Avalanche quite high as well. MetaMask, Lido Finance, Helium, Aave. Some of the projects we genuinely like on the channel, Filecoin, are in this list. So that is a very positive sign, and it's always something that I'm referring back to on Token Terminal. You can even see, or you can't see it because it's under this highlight here, that I have it in my bookmarks. So I do have all the websites I use daily in my bookmarks. That's very important. Now, if we look at the Mango exploit, people got wrecked here. It got exploited for over $100 million. How did they get wrecked? They got wrecked because of a lack of liquidity. So how you would avoid this is by looking at DeFi Llama, going onto the DeFi Llama tab in the top left, going to yields, then pools, searching by project. And if you're going to invest in a project, let's say I want to invest in Geese Finance, right? If I want to invest in this project and I wanted to invest in a pool or an asset based on a pool, I would look at the TVL and the liquidity of that pool, because the reason Mango got exploited was because of a lack of liquidity. The easiest way in the world to find out whether a pool has liquidity is to go on DeFi Llama, which, by the way, is the greatest website in DeFi right now. It used to be extremely simple. Their upgrades are ridiculously good. They have stablecoin pools, liquidation data, DEX revenue valuations. They have an optimizer, a borrowing section. Shout out to DeFi Llama. We aren't sponsored by DeFi Llama, but they are the greatest website ever. So, just use them, bookmark them, because there's everything on DeFi Llama now. They're killing the game, and you can literally see the TVL of every single pool before you invest, so you don't end up like a Mango. And funnily enough, before Mango got exploited, and as I alluded to before, it was because of a lack of liquidity. On the Discord, just a month before the exploit, someone had actually said, guys, I'm worried about some of these I'm worried about a potential exploit with some of the liquidity in these pools. Now, if they had listened to that person, there may not have been a hack. There are conspiracy theories, and this is that many DeFi exploits are inside jobs. I'm not saying Mango is, but something to keep your mind on. And yeah, this is a great way to find out whether a pool has liquidity. And then the last one, and probably the most important one, is Runway. Now, I could do a whole show on Runway. In fact, I should do a whole show on Runway, because when we look at what projects we want to be accumulating for the next cycle, or even in a shorter term, if there's projects we think can exhibit relative strength in the shorter term, we want to take into account whether they're actually going to survive. I mean, if this if this bear market is extended, I'm hearing predictions, 1 year, 2 years, 3 years, 6 months, I'm hearing a range of predictions, but whatever it is, if a project can't afford to pay their developers, can't afford to pay for their marketing, although they may slash their budgets, they still need to be known, although they may not, although they can't pay for incentives and pay their staff to keep the protocol running, if they can't do all those things, they're not going to survive. They need to do all those things to survive. They need to be able to pay to keep the project running. This is Runway. Runway is a measure of the amount of available capital or future accessible capital to keep a project running. And this is usually represented as a number in terms of time based on current expenses. And B, how they will actually be able to do that. Are they selling assets? Are they raising funds? Are they going to slash? Are they going to get cut employees? All these factors come into account, and I probably need to do a full show on it, because before you invest in any project right now, Runway is one of the most important factors, and that is something I'm so focused on. And there's a website you can use to actually look at Treasury value, which is just one of the component of part B that I explained before of Runway, because Runway is a few things, but one of them is based on treasuries. Because if you have a big treasury and you're a DAO, many DeFi projects operate as DAOs, by the way. If you have a big treasury, that helps a lot. Sure, your token value might take a hit if you sell assets from the treasury, but you're going to survive. Now, if you go onto OpenOrgs.info, you can see the treasury value of many major DeFi projects. Yes, this is only DAOs. So this website only applies if the project also has a DAO, which many do, by the way. We can see SushiSwap does, Tornado Cash, Decentraland, Rarible, Yearn, Synthetics, many great projects that we all like have are DAOs. But you can look at their total treasury and their liquid treasury to work out what's on their balance sheet, what accessible funds they have. Now, for a project that's not on this list, there are many ways you can conduct working out what its runway is. The first thing is to go back and look at its revenue. If they're earning revenue, they can easily tweak this to go back to the project instead of the users, or change the percentage weighting there, and that can help prop up the project. The second way is to actually talk to the projects. Go onto the Discord and sense the general vibe. Are they still posting? Are the developers still active? Are they shipping code? If they're not shipping code, they've likely cut their developer costs, and that means they're likely struggling for runway. If their social media posts have halved, they have likely cut their social media team. Maybe that's a sign they're cutting runway. There are a bunch of factors you can look at, but the Discords and the social medias are going to be the best way to capture that general vibe. And to be honest, you can be straight up and you can contact a lot of these developers now. Like if you want to know what kind of runway, let's just think of a random project Trader Joe has, for example, you can go into their Discord, you can at the founders or the community manager, and you can get some more info on what they're doing. And most times they're going to be pretty transparent with you. My experience is projects like to be transparent about runway. If they're struggling, maybe they won't announce it in public, but in a private setting, they may say something that might spark your ear. So if they say, yes, we're going to be around for 2 years, we have runway, and this is how we're doing it, we're doing this, this, and this, okay, I understand that. Whereas if they come back with a response like, yeah, it's been difficult, but we're pushing through, or something very wishy-washy where you don't have concrete evidence on how they are getting runway, that's an issue. So I will do a future video on that because, as I said, it's the number one factor when it comes to investing in a bear market, because many projects are going to fail. But at the end of the day, those are the kind of like the easiest ways to do it. So that is basically my update for today. I'm going to be doing, by the way, very exciting, we're going to be bringing back the Sunday show on Degens Den. I kind of missed doing it. It was a lot of fun, and I just want to have fun with you guys and interact and just give away a shit ton of money and enjoy my weekends with you guys, have a drink. So we're going to be bringing back the Sunday night shows. So I will be on, if you're in America, it'll be your Sunday morning. If you're in the UK, it'll be your Sunday mid-morning. If you're in Australia, it'll be your Sunday night. We're going to be bringing that back weekly, and we're going to be doing trading live. You guys know the trading comp is starting soon. Tricky and I are going to try our hand at doing some trading live. So, of course, register if you're not registered for the trading comp. What we're also going to be doing is playing some fun games, and I won't explain what they are yet, but we are going to be giving away money during interactive games that you can interact with us and play. So it's going to be a lot of fun. You're going to be able to win money, just enjoy yourself, ask me questions, because in these shows, I like reading the comments. What are you smoking, man? I need some. Crack. This kid knows diddly. No, I know absolutely nothing. I'm the stupidest guy in the world. Mars, what coffee did you have? I had a triple shot. Are you drunk? Wow, people really think I'm going nuts. People really think I'm going nuts. Am I really that energetic? Well, if you think I'm energetic now, you should watch Degens Den at the end on a Sunday. Is this guy like? No, I actually just woke up, which is quite funny. I'm full of energy today. I do have ADHD. Well, it's self-diagnosed, but my sister and my dad do. So I mean, it's pretty clear from watching the video I do. So I get very hyper and very passionate. And to be honest, I'd allude most of my success in this industry thus far to the fact that I am quite hyper-focused and hyperactive, because I think you need to be a certain type of person to do this full time. And I guess I'm that kind of person. All right, I'm going to head off now before I end up like giving myself a heart attack from DeFi excitement. I'm going to see you on the Sunday show, though. I'm going to see you then. All right, peace out.